Imagine being able to invest in my commercial real estate deal, or really anybody's real estate deals, with as little as a few $100s from anywhere in the world using none other than crypto. No banks, no mountains of paperwork, lending documents, legal fees, just a few simple clicks of a button. Sounds kind of crazy, right? Well, I'm actually planning to do this. And today I want to share why I'm considering tokenizing one of my commercial real estate properties, the real benefits for investors, the industry as a whole, and why I think this could change real estate investing as we know it forever. And of course, I want your 2 cents. Let's go ahead and dive in. What's going on, wise investors? Welcome back to the channel. For those who don't know me, obviously my name is Matt Aitchison, and I've been a commercial real estate investor for years. I buy, I operate, and I improve commercial real estate properties. I have done it on my boutique hotels. I've done it on medical office buildings. I've done it on shopping centers, you name it. And I have been somebody that always looks for ways to innovate, to stay ahead of the curve, to be an early adopter. And while sometimes that doesn't always pan out, I want to know all the great things that are happening in my industry, in the future of where things are headed, and how all of those converge to create a better outcome, better returns, better options and impact for anybody that is playing in these particular spaces. And lately, over the last year or so, I actually explored this a few years back on the 3 hotels that I had up in Lake Tahoe. I was thinking about tokenizing, and this was when the NFT craze was going on, doing NFTs for a variety of different things. We had a couple different strategies and angles on this. But it got me into this idea of exploring blockchain and tokenization, tools that I believe can completely transform how real estate deals get done. And it felt early then, it feels less early now, and yet still there is some things that need to get worked through to really have this become something that feels like it's going to get mass adoption. And the thing is, commercial real estate is one of the best ways, in my opinion, one of the best vehicles out there to build wealth, to generate cash flow, to mitigate risk, to hedge against inflation, to get equity upside and appreciation, and also get massively advantageous tax benefits in the process. Now, most deals require you to be an accredited investor with a big checkbook. And this has ultimately been many of the problems, maybe not even problems, but this has been one of the issues that I have seen where unless you are on Wall Street, you're a part of a hedge fund, a private equity group, a family office, you're a highly connected, high net worth individual, you're not going to know of these opportunities. And unless you are a full-time real estate investor that specializes and focuses in these asset classes, you're not going to get any of the benefits of owning these types of properties. And these deals are also, in many ways, illiquid. You can't just sell your stake whenever you want. The legal, the banking, the compliance processes are slow. There's many third parties involved. It's expensive. There's all kinds of friction in the way things are done. And if you want to raise capital for deals like this, well, good luck. It's a maze of paperwork, of phone calls, of manual tracking, of you name it. A lot of hurdles and roadblocks that disincentivize or really make it impossible for retail investors to get involved in investing and owning and getting the benefits of these kind of assets. So the bottom line, it's outdated and, in my opinion, it is ripe for disruption. That being said, just because things are ripe for disruption, there's a lot of variables that come into these equations that tell you whether or not there is adoption, there's interest, there's tailwinds behind where we believe this market, this industry opportunity is going, and whether disruption is right now or it's, just a matter of not if, but when, and that when could be very far into the future. So I figured let me just start by backing up and breaking down what is tokenization. What do I mean by tokenizing real estate? Well, think of it like this. Instead of selling big chunks of equity to a few investors, I would be looking to divide ownership into hundreds or thousands of digital tokens that live on a blockchain. And each token represents fractional ownership of the deal. So whatever the total ownership that is available for the deal, depending on what your share of ownership is based on the amount of tokens that you own that make up that, that's the amount of benefits that you would share in as an owner in that deal. And investors could buy tokens with crypto or fiat. Ownership records, and those records are secured and transparent on chain. One of the benefits of blockchain. Payments, distributions, and governance can be automated through what we call smart contracts, and potentially tokens could be traded in a secondary market for future liquidity. If you were an investor that said, hey, I need some liquidity, I want to sell my shares, even though this asset's going great and I'm getting returns and I'm getting cash flow, I need to cash out and get my liquidity. Instead of the whole asset needing to be liquidated, you would just sell your particular shares or tokens on the secondary liquidity market, right? And so it's turning real estate investing into something as easy as trading cryptocurrency or trading stocks. And why I am considering tokenizing one of my own commercial real estate properties, I have a medical office building that has great long-term leases with a hospital and a dermatology and a physical therapy practice and, credit grade tenants. And I figure, it's generating above performance level returns. And I was going, I want to test this out for real and maybe seed this idea with one of my own assets. Instead of it being something that, we're going to analyze and underwrite and try and buy, and, you don't know about a lot of the skeletons in the closet of an asset until you get in and start owning and operating it. I've owned this asset for, I think, 3 or 4 years now. It is well outperformed the, financial goals and returns that I'd modeled in a pro forma. And so I figured, hey, this would be a good one to maybe try and test out because it lets me tap into a global investor base. And that's including crypto holders who want real world assets without converting it to fiat, right? And having to have some taxable triggering event that ultimately many crypto investors don't want. And there's a lot of locked up liquidity in the cryptocurrency space that would love to get the benefits of real world assets. RWA is, the analogy for that, where the ability to give them a bridge into that space without a lot of the downsides to it is something that I think is very opportunistic. And by doing so, I can offer fractional ownership with low minimums, maybe $500 instead of, minimum of 50,000 or 500,000, right? In many scenarios that, depending on the deal size. So it creates a much lower barrier of entry for people to participate and get in the game of owning commercial real estate. It simplifies onboarding and compliance through automated, what we call KYC and contracts, know your customer and contracts. It gives crypto investors real yield and tax advantages that they don't get right now, like depreciation and distributions and sharing in the upside. And honestly, it would prove that I am willing to walk and talk and innovate in this industry, being that it's something that I believe in long term. And if it works, I believe that this could be a stepping stone and a model that I use for future deals and even help other sponsors adopt into their own investment strategy, and how this could overall have a big ripple effect, not only for investors, but for communities that these investments are being held in, for the industry as a whole and all the vendors who service this industry, for investors, for crypto. To me, it seems like there's a lot of win-win dots to be connected here. So let's talk about what's in it for investors. Why would somebody want to buy a token representing my property? Well, first, it would be for passive income, right? At the end of the day, investors want passive income. And, why would, somebody decide that this is better than crypto? Well, one, it's a diversification play into a real commercial real estate asset that is tangible, that has collateral tied to it, that has income tied to it, that has tax benefits tied to it. this idea of fractional ownership, you don't necessarily need to be rich to be able to invest. And that's one of the biggest hurdles I hear as a real estate investor, helping people trying to break into ownership of commercial real estate is, well, I don't have all this money laying around and therefore I just can't get into it. Well, if we can remove that barrier of entry and a lot of those hurdles and say, hey, look, as if you were investing in your 401k as a forced savings plan with a little bit of money from every check, or you were investing in an IRA, or you're buying stocks on the stock market. What if you could get ownership of assets that have these benefits and upside, and it becomes now a little bit of a diversification play, but it also just lowers the barrier of entry for them to remove that objection and actually get in the game. And I can't tell you how many people I know would be like, yeah, I mean, if I can, dip my toes in the water and not have to be the one to manage and operate these assets, to get the benefits of these assets, and I can just come in with a small amount, I would totally, dip my toes in the water and do that, right? And I think that is something that as more and more people did that and actually got to experience the benefits of it without a lot of the challenges of operating and owning these assets, mitigating and taking away a lot of those headwinds and concerns for a lot of people, and giving them the opportunity to participate in a lot of the upside and the benefits of it would be massively advantageous, right? The other side of it is when it comes to buying a token representing your fractional ownership in a property, you're going to be able to do that with crypto native payments. So you can get your distributions in stable coins or Bitcoin or Ethereum, depending on how that, offering gets structured or that token gets structured. There's tax advantages like depreciation and K1 reporting that obviously crypto investors don't get to take advantage of in this capacity right now. The potential future liquidity in secondary markets is a whole nother investment opportunity that is still working on being solved in this space. Obviously, like I said, diversification instead of all your money in crypto, which we know can be a very volatile, obviously advantageous and opportunistic, but also very volatile space. You can diversify and hedge some of that volatility, right, by getting exposure to dollar-denominated cash-flowing real estate assets. And this makes, institutional grade real estate accessible and democratized in a way that has never been done before. And so, I believe that this is the future of where the industry is going, and it still feels somewhat early. But zooming out, this isn't just about one deal or doing this on, one of my commercial properties. I mean, imagine an entire industry, all of commercial real estate, all of real estate in general, now built on this model. And obviously this is going to transform the way title companies and escrow companies and a lot of vendors and servicers of this industry navigate and operate. Some of them are going to go completely obsolete. Some of them are going to innovate and find new ways to navigate. But I do believe that this is where it's heading because it is going to be faster and cheaper in a lot of ways. It's going to allow deal raising and capital raising to be done more expeditiously and also more cost effectively. It is going to eliminate a lot of the fraud and the issues that are rampant in the real estate industry as a whole already. It's going to give access for investors all over the world, right? You could own a piece of real estate in Japan or from the United States, and you could be in Spain and own a part of a farm or a mission or a cause that is tied to an industry and is, with a specific real estate asset from Spain all the way in Florida, in Miami, right? So like this intercontinental access is going to be very big in my opinion. We're going to see lower fees and admin costs as a result of this. Real-time reporting, I think, is so big that blockchain transparency is really what's revolutionary, and the blockchain component of this, I think, is going to be really critical. Automated distributions, fractional access to trophy and core assets that were once off limits, and unless you were a hedge fund, a REIT, a big institutional player, you just didn't have the ability to share in those benefits, right? So analysts think that real world asset tokenization could reach 16 trillion within the next 4.5 years by 2030. And me personally, I want to be a part of that. And I want to be a part of proving this model actually works in commercial real estate. Now, let's keep it real. because this isn't easy, it's complicated, it's confusing in a lot of ways, and there's still a lot of things that from a regulation and regulatory and legal standpoint need to get worked through to kind of set the rules of the game and how we're going to navigate this space going forward. There's still a lot of people that aren't even playing in the crypto space yet, and that is a industry that needs to continue to evolve and grow and get more mass adoption. And then obviously, of course, right, there are, the tax complexities. Crypto to fiat conversions might trigger capital gains, or we, would need to clarify how that works. And there's going to be a lot of investor and industry education that still needs to take place. And I'm not, naive to that. There's tech barriers. Not every investor is comfortable with crypto wallets and how they work. Liquidity isn't going to be immediate. Secondary markets are still developing and are going to need to evolve, and that's going to take some time. Managing yield payments in crypto adds some level of operational complexity. Currency conversion, rent in US dollars, but payouts in crypto, right? So these are real problems, and I'm not pretending that they're solved right now. But I think with the right legal structure, technology stack, and transparency, which many of those things are available today, right now, this opportunity on a case study basis can be managed and can be done very successfully. And I'll just say this isn't theory. This isn't some new space that nobody has, vetted or even transacted in. There's a company called Red Swan that I've been following. They have tokenized, and allegedly, I'll say allegedly because I'm not 100% sure that all of this is verified, but Red Swan tokenized over $2 billion in real estate. Premier USP token raised over $50 million in the US with fully compliant offerings. A company named Terra is building a $2 billion pipeline of tokenized properties that are international and opening up the global and international real estate markets on their platform. Tyrios even filed for a Reg A mini IPO to bring this to retail investors in the US. And these pioneers are proving that there's demand and a path forward, and already a lot of legwork and calories burned on working through and solving a lot of these problems, which is why I love capitalism. I love that when people have a problem, because of the capitalistic infrastructure that these problems live in, innovation is forced. People who are smart, wise, resourced, capitalized, come to the table to try and solve and innovate and grow. And that's the beauty of the capitalist machine, is that we will always find a way to innovate and grow, and things will shift and adapt and go where they need to. And I want to take that path on a small scale with just one of my own commercial properties and see if we can do it even better. So that's my plan, but I'm not here just to pitch it. I genuinely want to know what you guys think, and I'm going to be putting together a pitch deck and meeting with attorneys and really doing what is necessary to move this forward. I don't have a timeline on it yet. It's something that I'm heavily considering. I'm trying to buffer out all the blind spots, talk with the people who have already looked around the corners that I haven't in the crypto space, in the legal, the SEC space, the entity structuring, the real estate space, all of the above, because that's what needs to get done here. That being said, I'm curious, what are your thoughts? Should I do this? Would you invest in a tokenized commercial real estate project or pitch? What excites you about this model? What worries you about this model? Where do you think things are going? Are we way too early? Or is this something that early movers are going to get rewarded for? I'm curious on your thoughts. Leave a comment down below or send me a message. I want your honest feedback because this is the beauty of being able to share real time what I'm doing, what I'm thinking about, why I'm doing it. And, hey, maybe it fails. Maybe it ends up being an overwhelming success. I've always used the failing forward and failing up mindset. It's always a way to create new breeding grounds for learning, growing, building new relationships, skilling up. Of course, if you can financially benefit from it, even better, bringing value through innovation and solving problems. And that's what I'm excited to do on this one. Don't forget to check out all the great tools, resources that we have down below for you and real estate investors, wealth builders looking to grow your wealth in commercial real estate. Thanks for watching today. Don't forget to drop me a comment. I'll see you guys in the next video. Cheers.